It's always a two-edged sword, this, isn't it? Because if you own a house and you think about selling it, it's good that house prices have risen, but if you're looking to buy a house, it's bad news. What are your headline figures?
Yeah, good morning, Madeline. This morning we've seen an increase in national home values of 1.2%, which is quite extraordinary given how high interest rates are and the prospect for further rate rises. And it's not just a strong monthly rise, but it's accelerated from March and April when national home values were going up about 0.5%. As you say, it's a bit of a double-edged sword depending on what side of the housing market you're on. But even sellers are still seeing national home values down 7% year on year, which we think is contributing to persistently low stock levels at the moment as well.
Is it the low stock levels that's driving that increase despite the interest rate rises, as you say?
Yeah, so if you look at the numbers, we're basically seeing an average of 35,000 new listings being added to the market nationally on average over the past 3 months. But the average monthly sales volume has been about 40,000. So it's that kind of classic demand outstripping supply. We're also seeing constrained supply from the construction sector, where increased input material costs and ongoing tight labour markets in the construction space have really blown out construction timelines, which is adding additional pressure to prices.
I'd like to talk a bit about the rental market as well, because you've looked at that as well. National rental index increased a further 0.8%. Sydney unit rents, gosh, they're up nearly 6% over the past 3 months. The figure that has stood out to me most is capital city rental listings. They are 36% below the previous 5-year average. That is an incredible drop in supply.
Supply across Australia's rental market has been in free fall for around the last 3 years. It's due to a combination of supply and demand factors. On the demand side, and somewhat alluding to RBA Governor Phil Lowe's comments yesterday, housing composition changed through the pandemic. We saw a breaking up of share houses, people spreading out across the rental market. On the supply side, the higher interest rate environment has deterred more investment activity, so the rate at which new rentals are being added to the market has slowed right down. Again, the pressures in the construction sector, and most recently the return of overseas migration, where about 85% of recent overseas arrivals to Australia rent. They largely travel to Sydney and Melbourne, which is why we're seeing that real acceleration in Sydney and Melbourne rents and units in particular.
What do you think that inflation rate of 6.8% is going to do to the cash rate?
I think that there's a multitude of factors for the RBA to consider next week. Housing price rises don't directly contribute to higher inflation, but obviously rents will. I suppose if there's one glimmer of hope for a slowdown in inflationary pressures in rents and the housing market, it would be across regional Australia. This time last year, we saw monthly rent growth of 1% across the combined regions. That has slowed right down to 0.3%. So we could at least see rents flattening out there soon.